right. We are live. So, um, matter of fact, I want to test something out here. Go ahead and say something real quick. Just test or whatever.
Test one, two, three.
Okay, I got you. Yeah, we're recording your voice too. I just want to make sure. Um, Weird. Did you get the? I think I sent it out. Server alerts. I'm pretty sure I did.
Yeah, I got a server alert. Um,
Yep. Yeah, I
so,
did. Okay. Well, what do you want to talk about?
uh, I got,
You pre-
I guess. Um, oh, I was wondering. Do you consider yourself a what kind of trader do you consider yourself? Like a price action, or have you changed in the over the years? Um,
Sure. Good question. No, I'm pretty much go by the market structure or price action, you want to call it.
yeah,
I'm always aware of certain market, uh, uh, you know, context as far as, if there's a FOMC, you know, and things of things of that nature, um, which impact the market. But uh, yeah, I'm overall, I'm looking and seeing what's going on and try to plan my trade from that, intraday, uh, or swing trades, stuff like that. So, um,
yeah,
yep, pretty much going by the movement of the chart. So, how you do that, there's like this is a crazy thing that I have up here, but it I'm looking at on the weekends I'm doing my homework. I haven't done it yet today because of the snowstorm last night that we had, and I had a lot of stuff I had to get done. But um, use those things to get uh, my temporary movement, you know, or the long term movement type of thing, and go make my um, guesses from there. And I'll use certain indicators depending on what I'm looking at and everything, to try to help plan my trade. Some people just go by moving averages. I got a bunch on this specific one. It's just all moving averages, but that's because I want to look at this. But um, uh, yeah, I don't use that for the SPY. I use it for the SPX. There we go. So, I'm looking at things like this. I'm looking for divergence patterns, like with the slow stow here. It's very very good at determining where the peaks are with divergence patterns. A lot of people don't know how to use indicators properly. They're like, oh, this thing stinks. It gives me a sell signal here, so I get in, and then it goes up. You know, um, that's kind of the first mouse type of thing. You wanna wait for divergence patterns to play out, and that takes experience. It takes patience. And sometimes you don't get a divergence pattern, but usually do. Like this bottomed out just right here while this is going down. And that was one of the reasons why back here I turned bullish. And sure enough, it is making a run up. I doubt it gets up to the 400 here. I think this is the 400. Yeah. Um, but where we go from there, uh, we'll wait and see. That we're up in the oversold area again, so that's why I'm
Mm,
thinking maybe Monday, Tuesday we might dip down. And but if you notice right here, see what it did? It dipped down, came back up, dipped back down, came back up, formed a divergence tank. So you get
yeah,
in right on the first sell signal here, and you're like, "Oh, here we go, man, we're tanking." And all of a sudden, it does this, and you get stopped out. So, and it's easy to do. That happened to me this Friday, um, and I just got caught. But I didn't put a lot of money into it because I didn't have a lot of confidence in it. But I screwed up and should have played that run up. Could have made 300, 300% or so. So I missed out on that one. No one's perfect, but um,
yeah,
so yeah, yeah. I wait. I usually wait for divergence patterns, and waiting for this one right here. I might have gotten caught right here off of this divergence, just right here. But the slow is still it was still going up also, so that scared me. But usually you don't get more than a triple divergence. So I would have had a lot more confidence right here, even though this was still going up. Uh, but yeah, you could definitely get caught off a double divergence if that. So you want to look at this, but then you also want to look and see, well, where are we on the chart with other things, horizontal support resistance, like right here. We were still below this resistance right here. So you might think, yeah, a lower, a lower high. So we're gonna, come back down. Um, so it's things like that you got to think about.
yeah,
Um, but no big deal, I mean, if you wanted to do that, that's fine. It's legitimate. But then you put in your stop loss as soon as it breaks that resistance right here. You're like, well, I'm out. And then knowing that, okay, now you have to wait here for this divergence, and then you have to say, well, okay, this could keep going higher. I doubt it. This is pretty high on the slow still, but um, you'll want to wait for it to come back down and set. So you're gonna miss that move right here that day. You get in here, and then it goes back up. Then right here, I would just be averaging down, and then boom. Um,
mhm,
so there's all kinds of things involved, what you're doing. But all right, with that said, let's get on my spy here. Get anybody in? We got a couple more people in here. Hi guys. Man, we're at a high end of the range right here. On the daily, what do we got? We're smack dab right in the middle. So we'll see what's gonna happen. MACD crossed over, but the CCI is getting awfully high, and so is the slow stow. No divergence pattern though, or anything like that over here. So we'll wait and see what happens. If we, this is going to have to get above for another divergence pattern right here. This is going to have to get above 417. So then we have a higher high, but yet a lower low on this to get another divergence to have another move down. So that's a possibility. Um, but another possibility is this is, the slow is still moving up. So that's why I don't know. But we could have a head and shoulders here where this just decides to quickly turn over. That could happen. Never know. What else? And I'm always looking at the VIX too. VIX did finally turn to the upside, but I don't know what's going to happen here. I'm not trusting the. It's in a downward wedge pattern, so uh, that looks weird to me. Oh, okay. So it looks like we're maybe consolidating here. We're on a support right here. So if we get a bounce and break out on the daily, but see, I'm thinking it's going to be a couple more days yet. So we'll wait and see what happens. Anything else? Okay. While we do that, I'm going to take a look at some of my indicators I use. This does not look right at all. Oh, I do that all the time. HYG. There we go. So this is high yield gains. If you look, it's not perfect, but high yield gains, right here. I mean, high yield gains just started tanking. Well, so that was a good sign. This is the SPX right here. Um, and what is really good about this is not just the comparison between the two, but what's going on with the high yield gains with the indicators. Okay, so um, that's what I'm looking for. And there was a divergence pattern here, which saw the drop, right here from whatever it was on here. It's giving me a double readout of the HYG. That's weird. But you had a pretty good drop here. But now both of them are coming back up again. So the MACD is still underwater. So we're still bearish until this crosses over. The slow's getting high again though. Well, so I still see it going up. I'll leave that one for last. What do we have? HYG. Take a look at the dollar. Um, Dollar's still in this downward wedge. If you notice, every time it breaks the wedge, boom, tank. Breaks the wedge, tank. So still waiting for this. It's starting to turn over here. The slow stow is quite low, so we'll wait and see. You know, if this breaks out here, um, then we might be seeing, you know, a change of the SPX. So that's one kind of indication that we might be maxing out. And again, just looking at the SPX, also it's again is high on the slow stow and everything. So I just have a feeling that we're going to be going up a little bit more yet. Um, so I'd need a couple more. You know, this would come down to the support line one more time, maybe. But it does look like it. This is getting some momentum here, but um, we'll see what happens here. But the big one for me, the big indicator is the New York Stock Exchange. With the McKellen oscillator, this just does not fail. Um, it just doesn't. Every single, for as far back as I could go, you have divergence pattern right here. Boom. It tanks. Divergence pattern, tank. Divergence pattern right here, a bullish one goes up. Bullish one right here goes up. Bearish one right here goes down. It's just like clockwork. Here's a big one right here, goes down. Bullish one right here goes up. So we are definitely in overbought
Hey
area.
traders, in this video
But the thing is, you got to look.
I tested the divergence 100
Naked
times.
Warrior, mute your mic, please. You have to be careful. Again, just okay, it's high, so we're going down. Yeah, you might get a temporary downward move. It could be big, it could be small, but it's not for the overall move, right? I mean, look, this went down, stayed up in this range right here, and the price kept going. Yeah, some negative days in there. That's why it goes down on the indicator, up, down, up, down. But a lot of people got faked out right here. They probably got pretty bearish right here with that divergence pattern here, and it ripped right back up, bear trap. But then it finally came down, and you had your, so this can take quite a while. I mean, this one right here, this divergence started January 12th and went all the way to February 1st. So this could start coming down. So, we could have a couple, it depends on, I mean, how high is this? It's at 261 right now. It usually could go to the 300s. Like this was 310. That was 290. I know this one was pretty high. Yeah, 352. So We could have a couple higher days yet. It's only at 261, but it has gone down from there before. But usually around 300, 290 areas, where you'll have a pretty big turn down. But then it could just drop down a little bit, come back up, drop down, come back up. It could be 2, 3 weeks later, then you finally get a nice divergence that you could trust, and so this could definitely come back up here. So we'll wait and see. I wouldn't necessarily be bullish right now. I mean, this is a pretty good run. Wait and see if you have a dip down and stays above the 100 on the McCollin. You might scalp it. Get in on a dip day. You get a red day like right here. Maybe even the second one when it comes back right down to the 100. Then you could have had a good 3 day run right there, something like that. But you're gonna want to be really careful with that. So that stuff like that, I'm always thinking about. I guess I'm just thinking out loud right now. But that's kind of what goes through my head. So right now, yeah, the market exchange could just keep going up. What else you guys got? What questions?
You have a good reference for charting, trend lines, and everything.
A good reference for charting trend lines? Yeah,
Yeah.
I definitely use trend lines. Um,
No, I'm just saying like a how-to because
oh,
I can get on there and draw lines, but I don't know if they right. You know what I'm
I
saying?
I think I have a video on that. So if you go to my YouTube video, I have a video on it. But um, yeah, I could go over that real quick. See, I got. I don't have it on there anymore. I moved it. Trend lines. Okay. And what are these doing here? I must have been. Let's see. Um, you know,
Unfortunately, I have Active Trader Pro and not Thinkorswim, so
well, that's
I
okay.
don't.
Trend lines you could do on anything. I was starting to set up a different kind of a thing here, so let me go to nothing. Here we go. Okay. Here we are on the 1 year daily. So trend lines basically this is the trend from here to here, right? Is the trend line. You mark the tops. So you just mark the tops, you mark the bottoms. Now let's see here. Right extension on. Says default. Okay. So, and I'll usually, green for or red for the top as resistance, green for the bottom. But I'm not going to mess with the colors right now. So you have your overall trend. Now, obviously, this is out of it, right? It broke this trend line here. So, I'll move that to right here. Okay, so now on the SPY, we're getting close to this trend right here. Now, more times it hits that, more solid it is. Okay, right here we only have 1 point. So it still means a lot, but not as much as if if this hit three times or so, I would have a lot of confidence that that would get rejected. But so we have that. Then you have your bottom. This is your support. Okay, now this is probably not the best example because the SPY has just been consolidating here, but within moves, these are called your secondary lines. But I'm not going to do it that way. I'm going to do it with my drawing tool here. So you have you could call these channels really, but once it breaks the channel, then usually what happens, it breaks and it will retest and then go. So you have your major trend lines and then the minor ones, but you're always you don't want to break. You don't have a trend. Well, temporarily you could right here until it breaks. Once that breaks, that trend's not good anymore, and then you reset it. Kind of like what I just did right here, right? I had it down here, and now I reset it. So
Mm-hmm.
you would reset it, to here. And now some people I just don't like this. Say they put a trend here from this
Mm-hmm.
top, but the thing is, if you keep going over, it breaks. It breaks this. That's not a legitimate trend line. Trend line shows nothing but resistance or support. If you're breaking lines, like this,
Mm-hmm.
right? You're cutting out that whole move. Well, that move means something. It means a lot. So
Right.
you don't want to break those trend lines. So right here, I'd come right here like that. That's my trend, which it was right here.
Right.
And if you notice, now here's where you start to learn how to use the trend lines, as they're pretty good at prognosticating. Okay, so that's when you have to learn wedges. That's a wedge, right? And it's pointing down.
Mm-hmm.
So a downward wedge, 68% of the time, I'm sorry, 78% of the time, it's going to go up.
Got it.
Okay, so think of a wedge, wherever it's pointing, the move most likely is going to go the other way.
Mm-hmm.
Okay, so if it's pointing down, it's got a good chance it's going to go up. If it's pointing up, where do you think it's going to go?
We go down.
It's going to go down. Okay, now on the education thread, there's a lot of there's charts and stuff like that on how to read wedge patterns. So you could go there, and I highly recommend you printing them out, or having them on your computer and burn them into your brain. It doesn't take that long to memorize that. But now here's the important thing, though. This is where trend lines are extremely important, right? So here's an upward wedge, right?
Mm-hmm.
See how the support line is going up? Okay,
Mm-hmm.
here is what they call an ascending triangle. What's the difference between the two?
One of them look more horizontal.
Exactly. It's got to be very horizontal. Very, very, very horizontal. And no wicks or something like that, coming up, because that will create a different kind of a wedge. The wicks are
So
very.
if it's horizontal, then it's I guess you can't determine if it's gonna go up or down, right? Like you can on the other wedges.
Very high probability it's going to go to the upside. And it's
Okay.
usually a bigger move.
Mm-hmm.
So see, that's why it's really important to understand if that's horizontal or is it just slightly below that, right? Because
Hmm.
now if it's slightly below, now what is it?
It's just slightly below is up.
It's a,
I mean
it's
down.
it's an ascending wedge,
Yeah,
which means what?
goes down.
Bam. That's kind of a big difference, isn't it?
Hmm.
Right? So those things are important to know. You have descending open wedge. Okay, so here's a wedge like this. This is pointing down, which is a bullish move. This is a descending open wedge because it doesn't come to a point that they're going away from each other. But it's the same thing. If it's pointing down, a descending wedge or open wedge, it's still going to go up.
Okay.
And
Invert.
vice versa. Open wedge going up, boom. Not every time, but 78% of the time.
Yeah, I'm trying to learn the science behind it all.
Yeah. So those things are very, very important when it comes to trend lines.
So in between your trends, you said those were
Secondary trends,
secondary trends. Okay.
because look, the long term, what's overall, where's the stock going?
Down.
It's going
Trending.
down. So you don't pay attention. Oh, but look, we're going up, right? And that's what I call trading in a vacuum.
Right.
All right, but you take a look. That's why larger charts give you the bigger picture of where everything's going. Okay, and all you're concerned is, oh, it was high here, it's low here. We're in a downtrend. Okay, but now you got people that again trade from a vacuum on the daily chart. They're like,
Hmm.
oh my gosh, we're going down. We're in a bear market. No, we're not. Here's the 3-year weekly. Okay, I don't have the uh, moving average on here, but on the moving average on here, the 50-day, I think it's the 200 on the weekly, and then the
So
50.
so now
So
that you zoomed out, you probably would use that other top as the main um start of your trend line.
right here,
Yeah.
yeah.
Okay.
So I would be right here, just like that.
Okay. That's what's kind of confusing too, because I don't. Is it better to chart on the yearly or the monthly or what? I know some people
On
do it on the daily,
on
but
everything. Oofta. Yeah, it depends on your trade and it depends on what you're looking at. Okay, so yeah, you want to have everything charted. Your weekly, yeah, you got your 20-year monthly, right?
hmm.
So remember, I was saying on the daily, oh my gosh, we're in a major downtrend. We are really. This started at $67 and the high is 479. I would say that's an uptrend, wouldn't you?
Yeah,
Okay,
yeah.
so overall, we're still in a bullish market. We're even on the weekly chart. All that this is what they call a correction. That's all that it is. Even if we get down to here where I think we're going to be going, um, we would just be crossing over the moving average to go into what they would consider going into a bearish market. So all this
Mm.
move, we're still in a bullish market, right? Here's the low, 248 up to 479. We're or if you just take it from where we're at right now, 409 from 248, we're in a bullish market. Um, but there are certain areas where then it is a considered a bearish market. Let me see. I could throw on the couple of simple moving averages here. Simple moving average. I'll put the 50 on, and here I'll put the 200. Okay, so yeah, I was right. It's the 200 on the 50 moving average, or the 200 moving average on the weekly chart. As long as we're above that,
You're
we're
an up.
we're we're bullish.
Okay.
Okay, so um, we dipped out and look where we stopped right here. So that's a little bear trap right here. Bam, came right back up. Okay.
Yeah.
Um, but then if we go to the monthly, okay, now it's the 50. So obviously we had COVID right here. I thought it broke in 2008. That's weird. Yeah, 2008 right here. The big .com crash. We dipped
Mm-hmm.
below that. So this was a bearish market. Right here we got close to it. Right here we got close to it. Well, we're in it. And right here, see, we're still well above it. So we're still bullish. But see, where I have us going is right here. It's taking another dip like this. Um, not a minor thing, but not I think after his year, I think we're really gonna rip. I could be wrong, and that I'll be the first one to admit that if we break this and just go from here, that could happen. But I just don't see it happen with the way the economy is right now. So that's what you could do. If you notice, see, I have a trend line on here, right here, um, from these two lows. So, and some people get overly too excited about, oh no, here's the trend line. It's going to come back down to this trend line. Well, it didn't here. Didn't here. Obviously, it did there because that's what created the trend line. But before that, where was the trend line? Right here. Right from these lows. Um, so, and again, just because there was a trend line there. Oh, it broke the trend line, so that means we're going down. No, not necessarily. That would be called a trap. That's where you get, it breaks certain things, and you get excited, so you get bearish on it, and then boom, it goes back up. That's again where it pays for patience, and that's where patience is the key to this game. So you have basically like a resistance and support. You have movement coming down. You're like, oh, it broke, so now we're gonna tank. But then what does it do? It comes back up. It bounces off, and it goes back up. Right? Or it
Mm-hmm.
can come back
Okay.
down. come back up, it bounces off of that, and then that's where you get in. Okay, because then that's been confirmed as a resistance, and now you're going to be going down.
Mm.
So have patience. I know, oh man, if I gotten in right here, we're already way down here. And yep, sometimes it just goes right through and just blows right past it. So you miss out on that move. So what? There's going to be other moves. So consistency, believe me, patience pays off. You wait for that play right there, and you're going to make more money than what you did on just hoping it does that kind of a move. Because then it does that, you get in, and then it rips back up. And you lose money. Where here, you're more conservative, and overall, you're going to make more money doing playing it like that, being conservative, waiting for divergence patterns on indicators and things like that, versus trying to be the first one in.
Got it.
All right. So, yeah, try to find that trend line video. I'm pretty sure it's on there, but the main thing is you don't want to be breaking lines, right? So
Mhm.
you don't have a, well, I already explained that, but you don't keep that trend line there. It broke through, so you move it up. Now, there's a science to that also. I see a lot of people doing that. It's just, oh, here's that trend right here. It's like, well, what the hell? That you got all this you got to deal with. That's not a trend line. The highs and lows
Right.
determine the lines. You don't. So just be a slave to the highs and lows, and you'll be okay. But like with that said, it helps you. Okay, like TRKA is a good example. It's a better example, maybe on I think the yearly. Yeah. Okay. So I told people about this. I don't know where it was back. It was back here at 11 cents or something like that. But here we look at this. We have a descending wedge, right? Most likely it's going to go up. So do you get in right here? No. What do? You'll wait for it to break the wedge first, because there's a 22% chance it's going to go down. You wait for it to break, and then usually after it breaks, it will try to, what they call, meet the point. It always comes back down. Once it comes back down, solidifies a higher low than from right here, and boom, you set your trend line. And look at where that came back down to, right there. So that solidifies that as a really good trend line. So you could have gotten in right there. Right? You had a higher high, and now another higher low. That's gold right there. Comes up, breaks. Now if you notice, at that dip, what did I do? I put another trend line in. So that's going to be my stop. Then another trend line right here, and now that it broke that, so I got to get that out of there. Okay, so and it wasn't too long ago I told people, that would have been a good day to get in right here. Why? Okay, it's going down. Well, that's true, but there's a strong support line right there. So what you could get in right here. If it breaks it, you get stopped out. A little tiny stop loss. Right? And you have potential for this just to keep going up this nice easy trend right here. And that's what you want to look for. See, OTCs and all this, and it's so hard because the support goes like this, and then it goes like this. And here's your, farther and farther away, bigger that stop loss is, and more your risk, right? So, and it gets whippy. So what you really want to look for is a trend that just does this. A nice, easy reversal of your trend. So then you slow, nice and easy moving your stop loss up. Okay, and that's one thing. Then what's the next thing? This isn't the best example for what I'm trying to show you. Maybe it was TGTX. Okay, this was on the weekly, I think it was. Yep, okay. So here's a great example. You got your trend line right here. Okay. But now look at the support lines are just as important. Okay, so what does this tell you right here? It's pretty steep, isn't it? So buyers are not coming in for a long time. But now the trend gets less steep, which says that the buyers are starting to get in a little bit quicker. And then from here to here, see how it's starting to turn? That's what you're looking for. So from here, you still don't get in. Why? Because you're still underneath this downtrend line. But now it breaks, comes down, sets the support right here. Could have gotten in here, but see right away, look, it went from here to boom, just straight up. It's still it was still a great play, right? But you would have liked to seen it just stay along this trend line for a little bit longer. This should have came back down here, came up, came down, maybe another time. And then just a nice slow move up where this just exploded really quick. So, but it did set this trend, and sure enough, it came down here, and now if you notice, I put another downtrend right here, resistance line. I mean, so this is telling. So what this tells you is this has got to do something. It's either going to break back to the upside again and start the next move, breaks that high right here, or it's going to break this support and then most likely it's going to come back down to that support right there again. So trend lines are very important to show you where you're at as far as what is starting to happen to that stock. Buyers are starting to come in earlier and earlier. This trend is broke. And now what you could do, now this is on a macro, so it's but now you could take your well, I'll do it right now, why not? This trend line right here was broken. Whoops. Okay, let's set that back there. And now I move it to that high. So technically, it's a downtrend still, but what happens when this goes higher? Then this support or this resistance gets lower or less and less steep. And then technically, this might take years, but eventually, if this is going to be in a long-term uptrend, it's going to break 56.74, and then the resistance trend line is going to be going up instead of down. Now you could do this. This is on. So you have these trend lines on here. So when you go to a smaller chart, you're not flabbergasted where you're like, oh man, I'm, you're doing your downtrend lines on this chart right here, and oh, it broke the downtrend line and it goes up, and you're like, all right, we're really going to take off now, because we broke this. But then on the larger chart, here's that downtrend line right here. So let's say this stock was up here, it just broke this horizontal resistance right here. You're like, oh man, there's nothing until 1959 and we're at 1826. I'm going to get calls, and we're going to go at least up here because there's nothing to stop it. And you're not looking at the bigger chart. And the bigger chart, these lines are even more important, right? So you come up here, you hit this, and then bam, you tank. And you're like, what the heck? That's why you chart on the larger charts. See? So probably went into it a little bit more than you wanted to, but you get that, that's why you do it on everything. You can do it on the minute chart, TGTX is, penny stocks are, weird, stupid like this. So, you'd be drawing trend lines every, 5 minutes on this thing. But,
Thank you for that explanation.
yeah. See, so at the time, there's your trend line there. There's the trend line there. Downward facing, it breaks, comes back, tries to meet the point, and then you have a rip up because that's what indicated that, a move up. So then there's your trend there. There's your trend there. Kind of a symmetrical. It's not going up or down. So that's usually a continuation wedge. So if this was coming from the downside, it should have broke up. But if it's coming from the downside on the bigger chart, it's going to be going down. So it's probably, this happens. So that's that's how you do trend lines.
Thank you, sir.
Yep. And
I'm gonna
then
start practicing.
yeah, and then what you want to do with those trend lines, you have those trend lines in there, right? But so like right here before this happened, yeah, you always want to pay attention to the horizontal support and resistance though also, right? You always have those in mind. So if it does break to the downside, then you're looking at, okay, where are we going to, before this move happened right here. You're looking at, okay, if this breaks to this south side, then you can start looking at horizontal support to see where it might, bounce off of. And if it bounces off of that right there, then you take that trend line out and you move it right there, like that. So you're constantly having to redraw everything.
Is the Fibonacci good for the support and resistance levels?
Yes, yes they are. You have to be experienced. More experience you have, better. But obviously that goes without saying. But you know, smaller the chart, less Fibonacci is important. Okay, so just a second.
I just have it soaked.
All right. Sorry about that, but
Hi, Ron. You have one reminder.
stopped.
A reminder called Clean the Ovens for today at 10 a.m.
Okay,
You
great.
can see if you have any updates.
Okay,
on
Google,
the
stop. I don't want to bring that one up. It's not on this one either. Okay, I'll go to my other chart here. This is on Trading View here. Okay, and these are my Fibonacci levels. Now, you don't want to fib a move like here to here. Okay, because that's half the move right here. And larger the move that you fib, the more accurate they are. Okay, so instead of fibbing this movement right here, you want to fib the really the bigger move, which was right here. Okay, and then you can still trade on lower charts, but then see you're going to be really aware of these areas right here. And then also, now you can do fib levels on fib levels, right? So you're looking for what they call congruence. So you might have a bigger fib level right here, down to here, and this area right here might correspond with the bigger fib level from this move, this overall bearish move. And then that's going to tell you, okay, this is a really big area right here, or this one is right here, or that one. And then you can mark that on your chart also. But yes, I played around with it, look at some videos on it. But this is, it's important. It's not, it's not the holy grail. There isn't one out there. But I mean, if you look generally, it obeys these levels quite well. It's kind of a self-fulfilling prophecy because Fibonacci is very, very popular. So if a lot of people are using it, then they're going to kind of play out.
All right. Thank you for answering that.
Yeah. Anything else?
Hey, Rombo, can you check SDGR?
All right. SDGR.
Yes.
Schrodinger.
Yeah.
Well, had a really nice solid move. Man almighty, this was just wow. Okay.
The price target. The price target on this is $60 to $80. I was just wondering.
$63.
This is going $60 to $80.
Okay, and who said that?
Not sure.
Yeah. I usually, if a new target comes out, it tanks. All right. If you have control over the market, all right, and you could push things down or up. You know what a bait and switch is?
Yeah.
Okay. Well, that's a bait and switch usually. You get a bearish, you get institutions or something like that. JP Morgan comes out, this is going to $70. So what do? They let it run around 30%, 40% of where it's at. it starts getting hype, and then they short the crap out of it and screw everybody over. Oh, but this was, you know, here, let's see, I think it was SRNE, I think, was my prime example. Oh, is Sorrento gone? See, now they're even gone. I can't bring the chart up anymore. Sorrento had, I think, I can't remember. It was like at $15 and it had a $33 price target on it. And guess what happened to it? Well, they're not even in the market anymore.
Okay.
It tanked completely after that price target. Maybe TRVN. I might have to go back to the 3-year weekly on this now. Yeah, right. So I'll get out of this. Whatever. So right here. No. That really screwed things up. I must have moved them. I just put them on here. So because it was down here. It doesn't matter. Okay, I remember. It was like the price was like at $3. Okay, in this area right here. And
Okay.
what happened was they gave out a $12 price target on it, and it's a pharma, so it had a great phase 3, and it went from 230 up to 320 right away. And then after that, it's done nothing but tank. And look how much it's worth right now, 65 cents. So be very careful when someone gives out price targets. You know, certain analysts just updated this from $10 to $4. I mean, especially when it's something ridiculous, from $10 to $40 or something like that. But now, what was that?
SDGR.
SDGR. It's really, it had a nice run here. It would have been nice to get in at $50. You've been up about 100% right now, but see, that's it. It's up about 100%. Boy, that would have been a nice run too. But here we're getting overextended again, and if you notice what happens when it gets in this range, it comes back down. So, are you in it right now?
It's really small, a few shares. So probably I'll set up a stop loss.
Okay. Well, the weekly deviations have look like they bottomed out, and they're just starting to move to the upside. So that's good. Um, Now this white dash line, these are deviations. It's just the way they measure things out statistically by a bell curve. And this is the average price, 21.41. So usually once it gets up on your bigger stocks, a second sigma move. These are sigma lines or deviation lines. It will come back down.
Okay.
And if you notice, it hit the second sigma, didn't come all the way back down to the average though. Hit it again, back down to the average. So I wouldn't be surprised to see this try to. Now here it hit a half deviation. These green lines are the half deviations. So usually once it breaks, it will go to the next one. They're like magnets, right? But
Mhm.
here, from this second summit, came back down, got rejected, got rejected. Now here, so we're at a big point right here. If you could get above 27, then you're on your way up to 28, 60 or so. But if it breaks down below 25.11, then you're probably coming back down to 23, or even possibly coming back down to the average of 21.30. And again, these
Okay.
are daily
Thanks.
candles, so this might take a while to see what's going to happen.
Yeah. Yeah, it has been between 24 and 26 for the past few weeks.
Oh yeah, yeah, it's definitely just been sitting here in this range right here.
Yeah.
So really, I mean, you got a lot of support at 24, 27. Um, so yeah, we'll wait and see what happens here.
Yeah.
But you're getting higher highs and higher lows, but now you're in consolidation. So you're kind of, if you got in at like 25.50 or something like that, you're in a tight spot because
Okay.
you're really not going to know where it's going to go.
Yeah.
Um, Volatility trading range. See, the support's getting less and less and less as the price is moving up. So that could be a divergence pattern. We really don't have one here though. Um, there was a divergence here, and that's why you got that downward move. Here to here, downward move. Um, yeah, this is really going to have to come up again, else you're going to get another downward move. So the next couple of days are going to be kind of important for you. On the MACD, it looks like it's trying to turn back up to the upside, so that's good. You're in bearish territory. You're above the zero line instead of below it, so that's good also. So that's the best I could do for you.
Okay.
Yeah.
Okay. Thanks.
Mhm. Anybody else?
How about FRC, Rumbo?
Well, going by the deviations, it's got to eventually come back up. But this could continue. Boy, even on the weekly chart, it might be a long, long, long time, but this should eventually get back up. The deviations, believe it or not, are still slightly going to the upside, but this over time could change, and then this could go from 15 down to 5. It did break this deviation right here, so this could keep going down. Which is, I mean, man, that's a 3 sigma move. 89% of the time it will not break that line, and this did. 99.9% of the time, but I'll guarantee you 100% this isn't going to get down here, because that means it's out of business. But yeah, it's getting into tricky territory, no matter how you look at it. over the last 20 to 30 days. Let's look at the last month chart here. Yeah, it's just so insanely low. I'm looking at the -3 on the 6-month daily is right here. So yeah, yeah, I don't know. I wouldn't touch it. To tell you the truth, that's just me. Last 20 days in the
Got it.
let's look at it on a V box here for 5-day swing. See what we got. Yeah, it would have been good to get in at 12.51. It's a little bit above the trading range here, so. Oh, that's the 5-day. Okay. 20 days, just really down here. Yeah, if you want to put some, you want to put a date night money into it or something like that and see what happens. But I'm not putting anything big in this thing. That's me. You got a volatile move to the downside like that. I'm on the larger chart. I'm not gonna mess with it. What was I gonna do? Oh yeah, I want to take a look at this on the. Yeah, I wouldn't mess with it until at least got above 1676. That's where the money line is here. Other than that, this could just continue to bleed out. Or on the daily, the money line's at, I don't know, 1465. But that's ugly. Here's another big player. AITX. Big drop down, and what happened to it? It stayed down there. And you really want to see something. Look at AITX back here, 47,000. And whoop. Oh, it's so low. It's got, and it's worth so much. It's gotta, it's gonna jump back up. Did it? This was 2008, my friends, not yesterday. And it stayed down there. I could show you example after example that's why bottom feeding from big massive moves down, it's not worth my time. And you could just find better stocks out there to that will give you nicer moves, even bigger moves, quicker. So you might be waiting for months with that one.
Thank you for looking at.
Yeah.
Hey, Ronbo, can you check CYGN?
CYGN.
Yes.
That's odd. It's not bringing me. It's not bringing up anything. Charlie, Yankee, Golf, November.
Yes. Side.
Is that a Canadian stock?
I may be saying it wrong. I'm sorry. Shoot. Give me 1 second. Let me just look again. It's on my. Mm, uh, my
CYAN.
phone. I'm sorry. My phone is CYN. Sorry.
Um. Hmm.
It's been down for a while, and I was pretty much close to breaking even. And I just didn't know if you saw any direction. It looked like it's going down to me, so I just thought about getting my money and putting it elsewhere. But I didn't want to, miss out on a little bit more of the money. But it's only been getting to like 128, 129,
Yeah.
130. I believe that's probably the top.
Well, it's resistance.
Um,
You
yeah,
know, you had a nice run here from 60 to 100% move or something like that. So, but yeah,
the
you kind of
resistance is where I got it
yeah.
initially.
Yeah, see, I wouldn't be interested in this until it broke $2. Um, but yeah, this is just consolidation right here. This whole area right here, just sitting there.
Yeah,
And like I said before, I don't need to be at the bottom,
yeah,
especially on the larger charts like this. This has been literally consolidating since January of 22, or I'm sorry, June. So it's just been doing nothing. Now some people say, "What do you mean nothing? It's gone up 100%." Uh, I yeah, and look how long it took you to wait for it to get there, and now you're at the very top of this level. Um,
yeah.
yeah, I would.
That's got in it. So it went down on me, and I was just hoping to get my money back. So I held it instead of taking a loss, and it got back there. So I'm just
Yeah,
going to take my money, put it elsewhere.
I would. I would take the money right here, and you know what? Guess what? If it breaks $2, get back in. Fine, it doesn't hurt you anything. Get back into it. You're in the now. Yeah, see, you put in a lower. a lower high right here, but you're still, pretty low on the overall thing. But um, it came here, came back down, came up, and it could easily come back down here. Why do you want to hold out and have it come back down to 85 cents? See, you're risking all of this to make this much.
Yeah.
That's crazy. Get out here. Oh, next day it goes up to $1.40. Well, it breaks that resistance. Fucking get back in. Then you just get in here. And now, guess what? Now you're risking from here down to here, or just below support. So you're risking that much to break that, and now you get over the $2 mark, so you're risking a little bit for it to go up. But right here, you're risking this whole amount right here, all of that to go right here, right now, right? People now, the perma bulls out there, and the hype people, they're like, oh no, I'm risking this much to get this much. And I'm like, that's not the way to look at it. You want it to break. You want to buy after it breaks breaks resistance, and you want to get out at resistance. You want to buy at support. Support's here, and you want to buy in here. No, you buy in after it breaks the resistance, not before it. That's a loser mentality right there. Yet that's buying high and selling low.
Yeah. It just got me back to even money, because when it went down to, like you say, 60 something, I was in the hole quite a bit.
Yeah.
And so I was just happy to get even. So I'm glad you showed me that. I've been trying to do the charting. I found a video that shows me how to draw the lines and stuff. And so I'm just trying to dissect more. And I saw what you mentioned earlier on your video. I was trying to catch a little bit. So
Sure.
every little bit helps.
Yeah. Oh, yeah. I mean, you're on it. There's an uptrend here, but now you got to deal with that. So yeah, see, you're risking it. Risking coming way down.
Yeah. No, I'm getting out of it.
So,
Probably on Monday or Tuesday.
Yeah.
Yeah.
Now.
On Monday for sure.
Oh.
Or cut my position a lot, because I got quite a bit. And I just need to, but at least $200. Quite a bit for me for doing the, what I'm doing.
Yeah. Speaking of trend lines. So here's your trend line, right? You could draw a trend line. Now this is on the daily chart, so you got time. But now if this comes down here to $1, okay, now not horizontal support, right? Horizontal support and resistance, but off the trend line right here. If this comes down right here, all the people strictly going by support and resistance, they're waiting for it to come here, and all of a sudden here, boom, it does this, right? So this would be a good area to buy. Like, I don't know, this is my drawing tools, it's not, so it's not perfect, but around the dollar range.
Mm-hmm.
But it's like, well, Ron, you said don't, buy the dips as it's on the way down, but this is an uptrend right here, right? You broke that high right there. So you get in right here, and then you here's your stop loss right there. So
okay.
If it bounces there and takes off, look where you got in. If it breaks, boom, you get out your stop loss, comes down to the horizontal support, see what happens there. Breaks that, see if it bounces from here. Breaks that, see if it bounces, you're back down to here again. Instead of holding all the way through, you want to risk this whole area for that amount. Right? That's crazy.
glad you showed me that. Thank you.
You're welcome.
I don't know
Okay.
if I got time for one more.
One more.
But you already.
That's fine. Go
That's
ahead.
okay. I'll get you next time. That's okay.
Yeah, I got to get running here. So 10:30 was kind of my max today. So glad you guys came on, and we will see you. Well, hopefully I'll be talking to you on Monday. So you guys have a good weekend.
Thanks, Ron.
All right.
Thank you, Rambo.
You too,
You are
Rob.
welcome. Thanks, guys. Take care.